They're definitely increasing. I think you opened up with you described it nicely on the opening, and the way I would add to that is that this is a soft landing. This feels like a soft landing. Everything about what we got in that data is soft landing, and it's a Fed that is very likely to accommodate correctly a soft landing. I think what we've all been scared about is a Fed that does something a little incorrect. What happened Q4 of last year? Maybe they were going to go too far beyond neutral. Maybe they were going to fight phantom inflation that really obviously isn't there. That's all off the table. Now it looks like rate cuts are much easier to get if there's any sort of pullback, any sort of economic weakness, any sort of trade-related stories that get us twisted up a little bit. And I think the market's applauding that. The market's basically embracing this soft landing story, and it's probably a story that hasn't been really a focus for a lot of people. You had a lot of people calling recession, massive rate cuts. You had a lot of others saying, no, they're going to have to hike rates. Inflation's coming. So it's sort of this middle scenario that was a pretty unpopulated place that seems to be the one that's forming for 2019.
Mark Zandi, if the markets rallied this week in large part due to this expectation that the Fed is going to get more dovish and could potentially now start cutting rates, at what point does it actually become bad news for investors?
I think it depends on the president. I think it depends on whether the president decides to escalate his trade war or stand down or pull away from it. It's on a razor's edge. I mean, this will not be a soft landing. If the president decides to raise tariffs, at least to the degree that he's threatened to raise tariffs, that's the fodder for an economic recession. But if he figures out a way to come to some face-saving arrangement with China and step away from the tariffs on Mexico, then I think the economy will be fine. It may even come back. So it really does depend on the president and what he decides to do here in the next few days, few weeks.
Barbara, on the topic of Fed rate cuts, do you think the market, the equity market, needs to see one as soon as June, or is it as long as the tone's suggestive that one could come later this year? Is that enough?
Yeah, I think it's more going to be the tone. I don't think we need to see it in June. If the Fed indicates they change a word or two to say that they're very aware of what's going on, and that's likely to happen, then who knows? I mean, you see the probabilities of a rate cut going up massively by early fall. So whether it's June or July, as long as the Fed is making it clear. But, I think the real issue is still trade. And it's not just China. And I think there's such serious risks still out there if we have a full-blown trade war, because you saw the IMF this week cut off 0.5 percentage point of worldwide global GDP growth, if this goes through. And the Mexico thing, I mean, whatever happens there, I think the damage has already been done, that this president will use trade as a political weapon. And you've got so many managements. I mean, we've already seen business confidence come off a bit, but I think it could get even worse, because if I was a manager and I had hundreds of factories in dozens of different countries, I don't know which country is going to hit next. And I'm going to wait and I'm going to see, what happens with the next election. I mean, it's a very difficult time, and uncertainty, as we know, means you hesitate and you don't act. So, and this we know can have a cascading effect in terms of we don't hire, we don't do this, and this won't show up this quarter or next. But it's, it could be an issue in the not so distant future.